We're making some outrageous and not so outrageous predictions for 2014. It's time to go digging for value. Hi, I'm Allison Southwick, and as always, I am joined by Taylor Muckerman and Joel South, energy analysts here at the Motley Fool. Let's just get right to the headlines, shall we? All right, we're going to head over to Oil and Gas Journal first. The U.S. Department of Transportation has issued a safety alert to shippers, carriers, emergency responders, and the general public that Bakan crude should be handled carefully because it is more flammable than other grades. Joel, what's behind the warning here?
Yeah, definitely. I mean, what we've been seeing is so much production out of the Bakan shells really had to get some kind of a stopgap to move a lot of that oil. So rail was the easiest short-term movement. Pipelines take a long time. But you're seeing a lot of these trains, when they do derail, are exploding. They're not just falling over and spilling, coming on fire. You saw a huge accident up in Quebec a few months ago, very deadly accident. Obviously, that brought the attention forward to a lot of people. Then in the last week, we saw another train, one of Buffett's Burlington Northern trains, explode in North Dakota. So, you know, people want to make sure that it's properly labeled. This crude has a lot more gas in it, so they either want to make sure that people start to degasify some of the crude so you don't see as many accidents, especially if it's going through a lot of cities and a lot of people around. You don't want trains that can derail and explode like this.
So can you talk a little bit then about the safety of trains derailing, the risk there versus, say, moving it by oil pipeline?
Yeah, definitely. I mean, if you move it by pipeline, there's still a lot of problems there. There can be spills, and you've seen that happen actually quite a few times over the past year. Exxon had a big spill down in the south. But you know what you're seeing with that, you're seeing the spills and the environmental factors, but you're not seeing the explosions there. And you know, pipelines are basically moved through areas that are really uninhibited, so you don't have as much physical risk to people. So you have that kind of trade-off. A lot of the rails is moved into the cities. So, you know, I think this really brings up a good point for people that have been opposing the Keystone XL pipeline. Yeah, they don't want to be moving a lot of crude through there, but you know, a lot of that crude that they're going to be moving is not only the Canadian oil sands, they're also going to be moving a lot of the Bakan crude. And Continental Resources, one of the big producers in the Bakan region, has come out for favor of Keystone XL, saying, you know, this is a better way to ship the crude to where it's needed. You won't have to rely as much on rail. Rail will still be there, but you know, if you can minimize that and minimize the amount of accidents, I think this could be a pretty big boon for the acceptance of Keystone XL going forward.
So is there any other takeaway here for investors to watch with this? Or?
Well, I think if you're an investor in some of the pipeline companies that are trying to get more pipeline capacity in that area, one company that's trying to get some of the natural gas in there is ONEOK. TransCanada has the Keystone XL pipeline. Obviously, that would be beneficial to them. Enbridge is also trying to move a lot of, get pipelines in there and get approval to move oil out of that area. So I would look at a lot of these pipeline companies that these are areas that have a lot of production, a lot of natural gas that still needs to be moved out of that area as well. So I would look at those companies to potentially benefit.
All right, let's move on to Reuters because if you guys haven't noticed, it's cold outside.
It is. I got my sweater on and everything.
It's freezing cold outside. And apparently, according to Reuters, icy weather is threatening oil output from Texas to North Dakota. So Taylor, how specifically is cold weather going to impact production?
Well, you know, maybe not so much in Texas, as I read that that's the only state in the lower 48 not below freezing temperatures today. So
it still probably feels below freezing for Texas.
For them, yes, it's probably pretty windy down there. But I'm going to go with the Bakan. More struggles for them based on this cold weather. This oil tends to freeze at -40 to -60 below into like a substance reminiscent of plastic. So not completely frozen, but it doesn't flow into the rail cars or the pipelines as it should. So cold weather that they're seeing right now, which they have talked about -60 degrees, could definitely pose some problems. This article talks more specifically about Continental Resources, strictly a Bakan producer, but then Marathon Petroleum, Marathon Oil, and Hess as well. Those two companies are a little bit more diversified, so I'm not so worried about them in this case.
So then, is this a blip in production, or is this going to be a bigger problem?
Well, see, that depends. I mean, if you look at Kodiak Oil and Gas, they talked about in December, cold weather in that month hampering some of their production. So this is now rolling over into January, and if it takes a long time for the ground to thaw or for the snow to melt, it could persist well into February, holding back production. And for a company like Kodiak Oil and Gas that's only in the Bakan and it's much smaller than Continental, this could be detrimental to their early year results.
All right, let's head over to the Wall Street Journal. They are reporting that Sandridge is selling their Gulf of Mexico business to Fieldwood for $750 million. Joel, what are the details of the deal?
So yeah, basically they're selling this asset that they just purchased 2 years ago. What you're really seeing is really the dichotomy between the new management and the old management. You know, James Bennett is here, Tom Ward, who was here before, went out and bought that asset for $1.28 billion 2 years ago and basically said this is one of the cheapest assets around. However, that didn't
He didn't
really
realize how cheap it was.
He didn't, yeah, exactly. He didn't, I mean, the deal isn't terrible, but basically what he saw was very cheap assets and they wanted to use that kind of as a cash cow to supply some of their other production areas. But they were really diversifying too far away from what they should have been concentrating on. And you saw this with a lot of companies, a lot of small oil and gas companies in 2005 through 2010, where they were just buying assets because they could. They weren't really focusing on the balance sheet and growing production and really allocating capital efficiently. So, you know, that's why you're seeing Sandridge sell these assets finally.
So the market liked the news. They saw a bump of Sandridge saw a bump of about 7% before the market opened. It sounds like you thought this was a good move too. Yeah,
I think it is. What we saw after the last third quarter earnings is you saw them have a really good quarter. However, investors kind of shied away after the numbers came out because they were worried about their debt reaching a certain level and would they have enough to fund their production after 2015. This is a nice move where it will give them more cash. Now they have $2 billion again of liquidity so they can get past that 2015 mark, and it really lets them concentrate in their core areas. The Mid-Continent is really where they're great drillers. They have everything set up there. Their well costs are now under $3 million per well. So I think that really allows them to focus in one area, get rid of this asset. They got a decent deal for it because if you look at what they're actually paying in cash, it's about the same amount of cash that they paid. The rest of the deal that they financed earlier on was through shares, and at that time, their Sandridge was trading around $8 per share. So obviously, now that they're lower, the deal actually looks pretty good for them. So you know now they can increase their production next year. They're looking at almost doubling their expected 2014 production by using this cash, getting 3 more rigs into the area. So I think overall it's a good move and it gives them cash to go forward.
All right. Well, for our last story today, we're going to head over to Rig Zone, where they are going to talk about Europe's offshore exploration hotspots for 2014. So let's just get down to it. What are the hotspots of 2014?
The hotspots include, so you're talking about the Barents Sea, as opposed to North Sea, which has kind of been drying up. That's been the big stalwart there in the European offshore space. You're also talking about the Black Sea, and then some areas down in the Mediterranean. So I'm looking at company, if you want access to all of them, ExxonMobil has got a lot of partnerships going on. And so basically, if you want broad exposure with a much safer investment, we can look at them. But then you look at, in the Mediterranean, a big field. You're talking about the Leviathan field. Noble Energy is really pioneering that with Israel. That could change the entire oil and gas space, depending on if it's the projections are accurate there. So that's a huge field for a much smaller company. You could really see some dynamic growth from them. And that's just 2 of these plays that you're talking about right now. Then that rolls up into Statoil, Norway's largest oil and gas producer. They're in a lot of the fields in the Arctic, both on the Norwegian side and the Russian side. So they've got a lot of experience there, and they've been doing exploration and production drilling in some of these newer fields. So those are just a few of the companies that I like a lot, especially as you move away from the North Sea.
Generally, what are your thoughts when you think Europe offshore? I know these are the hot spots of Europe offshore, but like broadly, what do you think of that area?
I think outside of the Mediterranean, you're looking at a lot of areas that are going to provide a lot more risk for investors the further north they go into the Arctic. Russia and their state-owned oil companies are going to move a lot more slowly than some of the more independent companies, but they're going to offer some good partnerships. So I think while it is a little bit riskier, there is a nice reward at the end based on projections. And I think that if you're working with the companies like Exxon or Statoil that have a lot of experience in these harsher environments, I think investors could feel relatively safe about it.
All right. Well, that's going to cover it for the headlines. Now it's time to move on to some outrageous predictions.
Outrageous predictions.
And not so outrageous predictions for 2014.
Sure.
We have our crystal ball here. Joel, you will be going forth.
Okay.
First, not fourth, and fourth. Here, and this is to set the mood. Isn't that nice?
That is nice. That's a nice crystal ball.
All right, Joel. I want you to give me an outrageous or not so outrageous prediction for 2014.
All right, so my outrageous prediction will be, let's see, the New York Yankees will finish last in the AL East, and the Seattle Mariners will finish first with their huge spending spree that they're going on this
just got
summer.
a little bit more outrageous.
So you're going to see a total flip-flop from what you've seen the last few years.
All right.
The worst will now be the dominant for 1 year, and the Yankees will be on a slide.
By the way, Joel's from Seattle.
Yes.
That's probably not
Full
a surprise to
disclosure.
anyone who's watching. Full disclosure. All right, how about a not so outrageous prediction?
So a not so outrageous prediction, I think, is SunPower for 2014. I think they will have a year not as great as what you saw from SolarCity this past year, but you'll see a year somewhat close to that. And really what you're looking at here is the price for photovoltaic systems has been cut dramatically over the last few years. Also, if you look at some of the big states where solar is really taking off, if you look at the price of electricity for a kilowatt hour, in California, it's about 15 cents. In New Jersey, another big state, it's about 16 cents, and even in Arizona, 11 cents. Now, throughout the nation, the average price is around 12.5 cents. If you look at what SunPower is producing for their utility scales, they're creating electricity at 10.5 cents. So obviously, they're already competing at grid parity. This is huge news for them, and I think it will really help them out. On top of that, like SolarCity, they're also in the leasing business. They have commercial leasing, and they also do the housing leasing. Obviously, they're not nearly the size of SolarCity in this phase. They're only about 1/3 of the size. But the good news with this company is they have efficient panels. And if you look at the life of a lot of these projects, they're 25-year, 30-year leases. Since they have a better efficiency and more dependable panels, you know, every year there's a lot of wear and tear on the panels, and they reduce some of the efficiency levels that they have. So having that better panel really, I think, is a better cost-effective way over the life of these projects. So I think they can compete at this level. One of the big knocks on them has been the cost has been more expensive. Obviously, they have better products, so it's more expensive. But their margins are finally creeping in and competing with a lot of their competitors. So I think this company is really set to take off. Right now, they could grow that leasing side of their business, but they're really maxed on their manufacturing. They're already sold out of all their panels. They have more manufacturing plants coming on in the next year, so that could really boost them, really increase that market share against companies like SolarCity. And I think they're set up very nicely for 2014 and in the future.
All right, are you ready? Now it's coming your
Give me
way.
that crystal ball.
All right.
All right.
What is your outrageous prediction for 2014?
My outrageous one is going to tie into my not so outrageous one, and that's because it stems from Brazil. The U.S. will make it to the final game of the World Cup.
Wow.
Coming out of the yeah, I'm American. Full disclosure. But my girlfriend's Portuguese and my history is German, so I have some conflicting interests on that single group. Portugal, I think. Who else is in there? Ghana is the fourth.
Hey, we got a
but they're
tough
coming
draw.
out.
We got
a tough draw, but they're gonna. I didn't say they're gonna win it. They'll make it to the final game at the very least. That's my outrageous prediction.
That's pretty good.
All right, what about your not so outrageous
So
prediction?
my not so outrageous prediction is that there's going to be some slump busters from the energy sector in 2014. One of those would be Apache, middled along about 5% gain in 2013, dividends not included. But they're a completely different company as far as their focus is concerned now. They pulled a 180 selling out of Egypt, which was the big drawback for this company. And so now you're looking at them focusing on the Permian Basin, supposedly one of the largest basins in the world now if they keep redoing their projections, not just the company, but even the EIA and all the other prognosticators out there. So they're following along with Pioneer Natural Resources, another big acreage holder here that's seen tremendous growth in the last year using the likes of Core Labs to help them on the R&D side. And then my other slim buster might be a little bit more outrageous than Apache is Petrobras, whereas I tied it back to Brazil. They're a company that had a first auction in a couple of years for their pre-salt fields with the Libra. Wasn't quite the same turnout that they were expecting, but they did get a big name in Shell to turn out for that. So they're going to get some help. 4 years of exploratory drilling coming up, so I'm looking for some great news out of that field. Not from the production side, because they're not expecting that until close to 2020, but hopefully they'll be finding some oil down there that they can get some plans for. And then the government's also been a little bit more friendly as far as pricing gasoline that they have to purchase for their downstream sector.
All right, well, you guys, that's going to do it for today. If you're looking for more energy investing analysis, you're going to want to check out our report. It's called 3 Stocks for America's Next Energy Boom. Send an email to oil boom@fool.com. You can also follow us on Twitter at
Still got it.
You still got it. Follow us on Twitter at TMF Energy. And if you have any questions for us or just want to drop us a line, you can email us at energy@fool.com.
That's right.
Absolutely.
All right, well, that's going to do it for today. For Taylor and Joel, I'm Allison Southwick. Thanks for watching.